Mutual funds are a type of investment vehicle that pools money from multiple investors to purchase a diversified portfolio of stock, bonds, or other securities. They are managed by professional money managers who make investment decisions on behalf of the fund's shareholders. When an investor buys shares in a mutual fund, they are buying a portion of the fund's underlying portfolio of assets. The value of the investor's shares will fluctuate based on the performance of the assets in the fund. There are several different types of mutual funds. Stock funds. These funds invest primarily in stocks and are also known as equity funds. They can be further broken down into subcategories, such as large cap, mid cap, and small cap funds. Bond funds. These funds invest in bonds, which are debt securities issued by companies or governments. Bond funds can be further broken down into categories such as government bonds, corporate bonds, and high-yield, junk bonds. Index funds. These funds aim to replicate the performance of a particular stock or bond market index, such as the S&P 500 or the Barclays Capital Aggregate Bond Index. They are often considered to be a low-cost and passive investment option. Money market funds. These funds invest in short-term debt securities such as treasury bills, commercial paper, and certificates of deposit. They aim to provide investors with a relatively low risk and stable return. Balanced funds. These funds invest in a mix of stocks, bonds, and cash, and are designed to provide a balance of growth and income. Investing in mutual funds involves several steps, including opening an account, researching funds, and making a purchase. In the below description, I have provided Demat account links. Go and open with that links. The first step in investing in mutual funds is to open an account with a mutual fund company or a brokerage firm. Once you have an account, you can start researching different mutual funds to find those that align with your investment goals and risk tolerance. Look at the fund's performance, expense ratio, and risk profile, as well as the fund manager's track record. Once you have identified one or more funds that meet your criteria, you can choose the one that you want to invest in. Keep in mind that it's a good idea to diversify your investments across multiple funds. Once you have selected a fund, you can make a purchase through your account. This can typically be done online or over the phone. After you have made your purchase, it's important to monitor your investment regularly. Keep an eye on the fund's performance and make sure it continues to align with your investment goals. Investing in mutual funds can have tax implications, and it's important to understand how your investments will be taxed in order to minimize the tax impact. When you sell mutual fund shares for a profit, you may be subject to capital gains tax. Long-term capital gains, which are gains on investments held for more than a year, are generally taxed at a lower rate than short-term capital gains. Mutual funds may pay dividends, which are distributions of the fund's earnings to shareholders. Dividends can be taxed as ordinary income, qualified dividends, or return of capital. This strategy involves selling mutual fund shares that have decreased in value in order to offset any capital gains from other investments. This can help to minimize the overall tax impact. To minimize the tax impact, you can invest in mutual funds through tax-advantaged accounts. The investments grow tax-free and distributions in retirement are taxed as ordinary income. In conclusion, mutual funds are a valuable investment option that can provide diversification, professional management, and liquidity to investors. By understanding the different types of mutual funds, the factors to consider when choosing a fund, and the tax implications. Now that you have a good understanding of mutual funds, it's time to take action and start investing. Remember, the key to successful investing is to start early and be consistent. We recommend you to consult with a financial advisor or professional before making any investment decisions. Don't hesitate, start researching and investing in mutual funds today. Your future self will thank you for it. It's important to keep in mind that investing in mutual funds involves risk, and there is no guarantee of future performance. It's also important to consult a financial advisor or professional before making any investment decisions. Thank you for watching.